Hey everybody, Chuck Barone here. It is Thursday, today's Wednesday. I'm missing my days this month. Wednesday, November the 30th, 2022. Another crazy day in a crazy friggin' world we're living in, guys. Nutsoville. As always, before we start the show, I just want to thank everybody for their support, for all you guys do every day to make the channel a success, watching the videos and everything else. We really appreciate you guys. And sorry for missing yesterday. I had a little bit of a flu symptoms thing going yesterday. Still feeling it today, but much better. Thank you. Anyway, markets today. Crazy, crazy day. Stocks up big. The Dow up more than 700 points. The Dow rallying, or the market, it was up across the board, everything up today. Market rallying on Powell's comments. We were talking about this speech that was coming up before they black out, before their open market committee meeting later this month or later in December. Market, in my opinion, cherry picking what he said and making it a much more dovish speech than it really was. But nonetheless, stocks up across the board. The bond market also rallying today. With the yields down, the 10-year down 4 basis points to 3.72. The 2-year really coming down 15 basis points down to 4.32. The bond market rallying today on this Powell news. And we're going to talk about more about that in the comments. The dollar today, of course, reacting to Fed Chairman Powell as well. Down pretty strongly, almost a full point, down to 106.03 on the dollar index. I guess, the Powell speech really has an effect on markets, doesn't it? With the dollar down, metals up pretty nicely today. Gold up $19.20, sitting at $1,770 per ounce. Silver up 95 cents. At $22.28 per ounce. Silver or markets rallying with the dollar coming down. I think metals really want to have a run. We'll see how they react as this Powell comments kind of lose their allure over the next couple of weeks as the data comes in, which is going to show rates have to keep going up. Oil also up today, $80.41 for a barrel of West Texas Intermediate. It seems like it wants to be in that trough between $80 and $85 a barrel, so it's right back there. It had just dipped down below, was up to 90, then back down about 76, now back at 80 bucks. Right kind of in the comfort zone, it seems like right now for that market. Natural gas, of course, gyrating like always, down 3.88% today to $6.95 for their million BTU. Market's very volatile with these guys. Be very cautious. Bitcoin today up. Nice day for Bitcoin. 562, up 562 bucks. Back above 17,000 at $17,047. Maybe the demise of Bitcoin has been exaggerated a little bit. Anyway, be very cautious with that market as well, because it doesn't seem like much of the news coming from cryptocurrencies right now is very positive news. And stuff you guys need to know, of course, the big news of the day. St. Jerome, the Fed chair, came out today, gave his speech at Brookings, and basically said that, it's time now for the Fed to slow the pace of increases. He also went on to say that inflation was still too high. He said that, basically, it'll be in my commentary about his comments. Basically, status quo in my mind. We knew that the Fed was going to taper down from 3/4 point increases to 0.5 point in December. That's still the plan. As far as into the new year goes, we know they want a terminal rate at between 5 and 6%. So they're still going to have a ways to go even after their December meeting. That'll get them about 4.35%. So they're still going to have another 3/4 to a point to raise. If they raise it at 1/4 at a point at a time, all that does is prolong the pain, guys. So St. Jerome's speech moving markets in a big way today but not, I think it's almost, the market takes what it wants. The market wants to rally. The stock market always wants to go up. There's a lot more bulls than there are bears. So they take what they cherry pick the speech and they take what they want from it. Anyway, market's up today, St. Jerome. Employment numbers coming in today, not as many jobs available. Market fell down to 10.3 million jobs available. There's still 1.7 jobs for every person looking for a job. The market's still really hot, even though it's not as hot as it was just a few months ago. I think that the Fed rate increases are putting a little bit of fear into corporations about going into debt to expand their businesses or to increase, add on new employees. But this market's still pretty warm. I mean, I don't really think that we're going to have an increase in the unemployment rate. So unemployment's still sizzling hot. Interesting news today. The GDP for the third quarter was revised up to up 2.6% from up 2.1%. Now, we all know that the first 2 quarters of this year were negative GDP numbers, totaling 2.2% negative. I think it was 0.6 and 1.6. I just don't remember the order. Now we've had 2.6 in the positive 2.6 in the third. The Atlanta GDP Now tracker says we're going to have 4.3% increase in the fourth quarter. We'll see if they've been pretty accurate. We'll see if it stays accurate. But I think that, this is, what the hell kind of recession is this? It's very selective, I think, right now, what's being affected by the rate increases of the Fed, with real estate obviously being the number one victim. But positive GDP numbers, so now you're talking probably a positive GDP of 5% for the country for the year, really? I don't know, guys. I think that we're in crazy times, in a crazy, out of its mind world. So more confusion and more crazy from the Fed, from business, and in these market statistics, market data, is probably something we should come to expect, right? Before we wrap up today, I just want to talk a couple of minutes about Powell's speech. I haven't had a chance to really dig through all of it in detail yet, but here's what I know, and here's what I heard today, because I don't want to find a reason for the markets to go up or down. I want to actually hear what he says, right? So what did we learn today? In my mind, nothing really changed. They talked about slowing the pace of Fed rate increases. That is not new news to anybody. We knew the increase in December would be smaller than the last one, and everybody's been anticipating they're going to start going back down to the normal increases of 0.25% probably as early as January, okay? What else did we learn? Well, Powell, in his mind, still believes employment is too hot, and obviously the inflation rate is really still way too high. He understands that even with the rate increases they've already made, that it really reduced the inflation number much, maybe the top line a little bit, mostly from oil and gas, prices coming down, but the core numbers have been on the rise. So we know, regardless of what this market wants to think today, we're not out of this inflation fight. We're not out of this tightening cycle. We're not even close to that, okay? So, if we really want to hear what Powell said, okay, the speech was obviously way less dovish than the market wanted it to be, even though the market interpreted it that way. But basically, Powell said that rates would have to go higher. They expected a terminal rate, which is the peak rate, at 4.6 overnight. They're already at 4.35. We know we're going to go above all of these numbers, right? So now he's already talking the terminal rate's going to have to be higher, between 5 and 6%. And he also added in this one, that they would have to stay higher for longer. Okay? Meaning, no matter what the stock market and the bulls in the market want you to believe, guys, there's no sign anywhere on the horizon of rate cuts coming. Okay? There just isn't. So if you're that kind of bull and that's what you're looking for, you're going to be disappointed. We have to live in the world as it is, not in the world as we wish it was, right? So guys, take due notice of this. The policy didn't change a bit. We're going to have rate increases. It's going to go up in December. We're going to have rate increases into 2023. Depending on how the data looks, we'll see what the rate increases look like, how many they'll have to be, and how long they'll have to see it there. That's all down the road. We'll have to find out. Judging from the way the data has been coming in, though, it doesn't really look like the Fed has much of a handle on this inflation yet. You know, the media is always going to want to say they do, but it doesn't really look that way. So prepare and beware of this. Know, if you're borrowing money, it's going to be more expensive. The idea right now is to hold cash. Hold cash as tight as you can. Pay down debt if you can. And save as much as you possibly can. Because when this recession's over, and there will be a recession, everything's going to look like it's on sale. And you'll be able to get much better deals later than you will today. Anyway, guys, that's it for the day. We really appreciate your support. As always, if you like what you're hearing, hit the like button. Share the video with your friends and your subscribers. As always, ask your questions and comments. And if you have something more in-depth, ask Chuck Barone at gmail.com. A lot more data coming tomorrow. Another big day. A lot of employment information coming for the rest of this week. We'll see where this goes. I just got a feeling that these numbers are going to come out and poke a pinprick in this bubble today of today's balloon. We'll see. Anyway, guys, we'll be back again tomorrow to bring you up to date. Until then, take care. Thanks.